today's live. Thanks for being a fan of my fan page, Finance Freedom Mastermind. So glad to have you here. And today we're talking about the 5 types of investor from Rich Dad's Guide to Investing by Robert Kiyosaki. If you're not a subscriber or fan, go ahead and like the fan page. If you're on YouTube, subscribe to the channel and go to this URL, yesfinanciallyfree.com. I'm going to put the URL underneath this live video. And it also, on my blog every day, on these live videos, I'm actually broadcasting live on my blog. So I actually embed a YouTube video that I'm live on right now on my blog. So you can always check out my blog to catch all my lives. That's the great thing. Yesfinanciallyfree.com. If you haven't gotten your free ebook, Working Parents Guide to Financial Freedom, I'm so excited for you. Then go here, yesfinanciallyfree.com, put in your first name, email address on the right side. If you're on a phone, just scroll down and then hit the red yes button and you will get your free Working Parents Guide to Financial Freedom and get put on my email list where I email about what I will be talking about every day live at this time, 9:30 a.m. Hawaii time, 3:30 p.m. Eastern time. And all the topics are about financial freedom. So today we're going to do 5 types of investors from this book, Rich Dad's Guide to Investing, what the rich invest in that the poor and middle class do not. So I like Robert Kiyosaki because he likes to talk about how to become rich. So we're going to talk about that today. A little bit about myself. My name is May Doldalau. I live in Honolulu, Hawaii with my 6-year-old son, Jordan, and my husband, Jamal. I used to work at a bank in 2011, and I had over $40,000, like 8 different credit cards, lines of credit, owned no property. It was just consumer debt. So I paid it all off by April 2016, improved our family's net worth by $500,000, and we were making almost $500 a month in passive income when I quit my job at the bank. I found my resignation letter the other day. Actually, my last day was December 23rd, 2016. And I haven't gone back since. I became a full-time mother, and I love the bank, okay? I'm still friends with the people there. It's just that I didn't want to work a job anymore. I became a full-time mommy. And I continued being a part-time internet marketer, and I started a part-time finance freedom mastermind, which is groups of clients where I mentor how to pay off debt, but also create passive income and create financial freedom as quickly as possible, improving net worth all at the same time. And that's what I do. So Finance Freedom Mastermind Program, all the programs are at yesfinanciallyfree.com under the products page. So just go check it out anytime. During this broadcast, after this broadcast, go there and check it out. So that's a little bit about my story. Now, I actually own property now. This condo we live in Waikiki, we own another one that is an Airbnb business. So we do own 2 properties now. And we bought 3 in the last 3 years, sold 1, turned it into a business and sold it for a profit. So I'm here to talk about Rich Dad. I learned a lot from Rich Dad in my process of, paying off debt and learning how to become more free and more smart with money. So I want to share some of what he's doing. And we are actually going through this book very carefully in our mastermind right now. If you're interested in the mastermind, go to yesfinanciallyfree.com and go to the products page. Okay. So I'm excited to be here today. Let's talk about the 5 types of investors from Rich Dad's Guide to Investing by Robert Kiyosaki. The first type of investor is the accredited investor. Okay, the accredited investor is an investor who makes at least $200,000 a year for the past 2 years and expects to make the same amount of money this year. So that's pretty high for most people. If you're a couple, you make at least $300,000 a year for the last 2 years, and you expect to make the same amount this year. Or you have at least $1 million net worth. Okay. So that is what it takes to become an accredited investor. Most people don't qualify. In the book when it was written, less than 3% of the United States population actually qualified to be accredited investors, all right? And I actually do not qualify right now, and my husband does not qualify right now to be an accredited investor. But an accredited investor is someone who makes a lot of money. Now, they are allowed to invest in certain investments that have less rules, they're less regulated in the SEC. And the SEC doesn't allow regular people who don't make as much money or have as much high net worth, doesn't allow those types of people to invest in these types of investments because they're too risky. And Rich Dad, who was the mentor for Robert Kiyosaki wrote the book, and he learned all his knowledge from his rich dad, which was his best friend's dad. He calls him his rich dad. His rich dad was an accredited investor. And on his board game, Robert Kiyosaki made a board game called Cash Flow Quadrant. When you get out of the rat race in the board game and you go on the large board and you're buying big businesses like chicken franchises and things like that, that is accredited investors' business opportunities, all right? He also talks about another business opportunity that his rich dad had where he was given the opportunity to buy in Texas Instruments before it went public. But there's other companies he also was given the opportunity to buy before they went public and invest in. So if these kinds of deals where it's pre-public, private companies, they need funding, they need investors, they haven't gone public yet, that is for accredited investors. Now they can be very risky. A business could be terrible and not ever go public and just fail, right? And your money just be gone. So they limit these types of investors to accredited investors. But if you know what you're doing and you're smart and intelligent about it, you can make a lot of money. And Rich Dad always told Robert Kiyosaki that that's why the rich get richer, because they can be accredited investors and they can get the insight on a lot of good deals before they reach the public, buy it in large volumes at low prices. They get the best deals. Okay. So that's accredited investor. So if you want to be an accredited investor, if you already have a net worth of $1 million or you have a high income, then that might be what you want to do. Okay. The next type of investor is called the qualified investor. Qualified investor is a person who has money as well as some knowledge about investing. Qualified investor is usually an accredited investor who has also invested in financial education as it relates to the stock market. For example, he says qualified investors would include most professional stock traders. Through their education, they have learned and understand the difference between fundamental investing and technical investing. Okay, so fundamental investor reduces risk, looking for value and growth by looking at financials of the company. And that is like, we have a security analysis mastermind right now at financefreedommastermind.com. And if you you can put that in. Or yesfinanciallyfree.com, go to the products page. We have a security analysis page. We have a security analysis mastermind. We're studying the book that Warren Buffett studied to become basically a qualified investor. So somebody who actually understands fundamental investing, how to invest in the stock market to create great wealth. Yeah. And you can become extremely wealthy doing that, like Warren Buffett. So there you go. So that is a qualified investor. Technical investing is so Warren Buffett is acknowledged as one of the best fundamental investors. Technical investor is a well-trained technical investor, invests on the motions of the market, invests with insurance from catastrophic loss, and they select good stock for investment based on supply and demand from the company's stock. They study the patterns of sales price of company stock. Will the supply of the shares being offered for sale be sufficient based on the expected demand for the shares. So that's what a technical investor is, okay? So qualified investors basically are people who understand and know how to invest in the stock market, okay? All right, so the next type of investor, and not obviously, but I am studying to be a qualified investor. That is why I created the Security Analysis Mastermind Group. So that is what I'm aiming for right now, is qualified investor. The third type of investor is sophisticated investor. Sophisticated investor knows as much as a qualified investor, but they have also studied the advantages available to the legal system. Rich Dad defined the sophisticated investor as an investor who knows what the qualified investor knows and who is familiar with the following specialties of law: tax law, corporate law, and securities law. While not a lawyer, the sophisticated investor may base as much of his or her investment strategy on the law as well as the investment product and potential returns. The sophisticated investor often gains higher returns with very low risk by using the different disciplines of law. Okay, so sophisticated investor knows about law, taxes, corporate structure. They know the basics of the law, and they also are able to take advantages of the ETC, which stand for entity, timing, and characteristics. E stands for control over the entity, which means the choice of business structure. So if you are an employee, this is usually not in your control. A person from the S quadrant usually can choose the following entities: sole proprietorship, partnership, limited liability, partnership, limited liability, corporation, S corporation. Yeah. Okay, so this is the type of person who knows about corporations, law, tax laws, understands timing is important because ultimately we all need to pay taxes, and you pay taxes living in civilized society, so you need to control the timing of paying taxes, other kinds of things. Okay, so that is a sophisticated investor. We're going to move on. The next type of investor is the inside investor. The inside investor is someone on the inside of an investment, okay? And Rich Dad told Robert Kiyosaki when he had no money to be an inside investor. And an inside investor creates a business from the inside up. That way they learn how to do it. They learn business. They learn how to create a business. Then they understand how business runs. So then they'll use that knowledge later. If they become an accredited investor, they can use that knowledge to gauge whether another business is good or not, because they have experience creating one and being on the inside of one. Yeah. It could be as small as a rental property. So we have an Airbnb business. So we are actually an inside investor. That is another goal we had, was to become an inside investor. And we have this business right now. YesFinanciallyFree.com, right? It's a business. So we are actually technically also inside investors, all right? And the last investor type is called the ultimate investor. The ultimate investor takes their business and then he sells shares to the public. So let's say YesFinanciallyFree.com or some real estate conglomerate, if we decide to build one, when we build our business big enough and it generates enough cash flow, we can actually take it to the public and make it a publicly traded company, right? That's when you become an ultimate investor, where the public actually buys shares of your company, okay? And then you can make a lot of money that way. You can see Facebook and all these other places, all these companies that went public became very, very wealthy. So those are the 5 different types of investors. Which investor do you choose to be? Thank you for being on this live. There will be more detailed information on the blog. So I highly recommend you click the link below this video and click the link below this video and get more information. And definitely join the email list if you haven't done so already. I will see you again tomorrow, same time. Aloha, take care, bye.